Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on departmental accounting. I would like to request all the viewers to subscribe my channel and to communicate about this channel to the students of commerce who are pursuing BCom, CMA, CA or CS. Vijaya Limited has three departments I, N and K. Information for the year ended 31st/12/21 is given below. So we have three departments I, N and K. Stock on 1st January 21. Department I 13,500, 18,000 for Department N and 27,000 for Department K. Material consumed in Department I 36,000, in Department N 54,000. Manufacturing expense for Department I 22,500 and for Department N 45,000. Stock on 31st December 21, 18,000 for Department I, 63,000 for Department N and 36,000 for Department K. Unrealized profit in stock on 1st January 21, 4,500 for Department N and rupees 6,000 for Department K. Sales in Department K is 1,53,000. Stock of each department are valued at cost to the department concerned. Department I transferred goods to Department N at a margin of 30% above departmental cost. Department N transferred goods to Department K at 25% above departmental cost. Other expenses were staff remuneration rupees 6,000, stationery rupees 4,500, rent rupees 27,000, depreciation rupees 18,000, advertising rupees 13,500. These expenses are to be shared by the departments in the ratio of gross profit. Here I have prepared the structure of the departmental trading and profit and loss account. So we have to prepare this trading and PL account in the books of Vijaya Limited. On debit side, we have three departments I, N and K, and on the credit side, we have the three departments I, N and K. So the first item that we are going to write here is regarding the opening stock. So I am writing here to opening stock rupees 13,500, 18,000 and 27,000. Next we have material consumed. So on debit side we have to write here two materials 36,000 for Department I and 54,000 for Department K. Then the manufacturing expenses we have to record here on the debit side two manufacturing expenses. 22,500 for Department I and 45,000 for Department N. Then we have to record the sales of Department K. So I have to write here on the credit side buy sales. This is 1,53,000. Now we have to prepare a small working in working note number 1. As because the goods are transferred from Department N to Department K and from Department I to Department N. So we have to calculate the value of goods transferred from Department I to Department N as well as from Department N to Department K. So in working note number 1, we have to show what is the value of the goods transferred from Department I to Department N and from Department N to Department K. So I am writing in working note number 1 calculation of amount of goods transferred so from Department I to N And in the second column, I am writing from Department N to Department K. All the figures are in rupees. So first of all, I am writing here opening stock 13,500 in Department I, and here the value of opening stock in Department N is rupees 18,000. Then we have to write here the value of materials consumed. So this is 36,000 in Department I and 54,000 in Department N. Next is manufacturing expenses. $22,500 for Department I and 45,000 for Department N. So sum total of these three items, you will get 72,000. And we have to reduce the amount of closing stock of 18,000 in Department I. So since there was a transfer of goods from Department I to Department N, there will be an item that is the value of stock that was transferred from Department I to Department N. So we will show you shortly. So this is the cost of goods transferred. So 54,000 is the cost of goods transferred from Department I to Department N. And it is given in the question that Department I add a markup of 30% on cost. So there is a markup at the rate of 30% of 54,000. So 30% of 54,000 is 16,200. So this is the transfer price of goods transferred from Department I to Department N. So this transfer price to be included here in the second column, that is in order to calculate the value of goods transferred from Department N to Department K. So opening stock of Department N was 18,000, material consumed 54,000, manufacturing expense 45,000, and transfer price from Department I to N is 70,200. So if we add up these four values, we will get 1,87,200. From this figure, we have to reduce the amount of closing stock. So less closing stock of Department N was 63,000. So cost of the goods transferred. So cost of goods transferred from Department N to Department K is rupees 1,24,200. So there was a markup of 25% by Department N. So I am writing here markup at the rate of 25%. So 25% of 1,24,200 is 31,050. Therefore transfer price is 1,55,250. So this is a working note number 1. Here we have calculated the transfer price or the value of goods transferred from Department I to Department N and from Department N to Department K. So please have a look at it. Now in departmental trading account, we have to put this figure of transfer price. So on the credit side, I will write here by transfer. In Department I have to write 70,200. So this is the goods value of goods transferred by Department I to Department N, and 1,55,250 is the value of goods transferred from Department N to Department K. So on the debit side, we have to record it as to transfer. So in Department N, I have to write 70,200. And in Department K, I have to write 1,55,250. So, and the last item on the credit side is the closing stock. So it is given in the question the value of closing stock of Department I is 18,000. 63,000 is the value of closing stock of Department N, and 36,000 is the value of closing stock of Department K. Now it's time to calculate the gross profit. So I have to write here on the debit side as the balancing figure as gross profit, and you will get, first of all, we have to sum total the values of the amount of transfer and the closing stock, and you will get 88,200 for Department I, and the gross profit will be 16,200. Then 2,18,250 is the sum total of the transfer price and the closing stock, and the gross profit for Department N is 31,050. And the sum total of the credit side for Department K is 1,89,000, and gross profit is 6,750. So this gross profit, I have to show it on the credit side as gross profit brought down 16,200, 31,050 and 6,750. So now we have to prepare another working in order to distribute the amount of common expense to the three departments in gross profit ratio. I am preparing the working note number 2, that is allocation of common expenses. So first item is staff remuneration, and the amount is 6,000. Next is stationery, amount is 4,500. Next is rent, 27,000. Then we have depreciation. It is given 18,000 as depreciation. Then the last item of common expense is advertising. And the advertising cost is 13,500. So total amount of common expense is 69,000. Now we have to allocate this common expense of 69,000 to the three departments I, N and K in gross profit ratio. So the amount of common expense that will be allocated to Department I will be 16,200. So 16,200 is the gross profit of Department I, and the total gross profit of the three departments we have 54,000. 16,200 plus 31,050 and 6,750. So if you add up the three gross profit of the three departments, we will get 54,000, and common expense is 69,000. So the amount of common expense that will be allocated to Department I is rupees 20,700. Then a common expense to be allocated to Department N, so this will be 31,050 by 54,000. 54,000 is the total gross profit of the three departments. Multiply it with 69,000 and you will get 39,675. An amount of common expense that will be allocated to Department K will be 6,750 divided by 54,000 and multiply it with 69,000. And you will get amount of 8,625. So this common expenses for Department I, N and K, we are going to put in the departmental trading and profit and loss account. So please have a look at it, how I have allocated the common expenses to the three departments. So in the profit and loss account, I have to write here as two common expenses. $20,700 for Department I, 39,675 for Department N, and 8,625 for Department K. So after allocating the common expense, we will have a departmental loss. So the net loss for the departments, you will get by net loss. So 4,500 is the net loss for department I, 8,625 for department N, and 1,875 for department K. So this will be the balancing figure you will get. So 20,700 is the amount that I have to record on the debit side of department I, 39,675 for department N, and 8,625 for department K. Now we will have to prepare the general profit and loss account because there was unrealized profit in the opening and the closing stock. So before preparing the general profit and loss account, I have to calculate the unrealized profit on the closing stock. So for that purpose, I need to do a small working in working note number 3. In working note number 3, I have to do the workings for calculation of unrealized profit on closing stock. So value of goods transferred from department I to department N included in closing stock of department N. So what is the meaning of it? So you will see in the trading account of department N, so there was a goods transferred from department I to department N, as well as there was outside purchase made by department N. So the closing stock of 63,000 of department N, it has two parts. One part is the outside purchase and the another part is the amount or the value of goods transferred from department I. Here you can see that department N has made an outside purchase of 54,000 and there was a value of goods transferred from department I to department N to a tune of 70,200. So the closing stock of department N, that is 63,000, it includes two parts. One is the value of goods purchased from outside and the amount of goods transferred from department I. So in this working note, we have to calculate what is the amount of closing stock that represents the value of goods transferred from department I to department N. So here I have written value of goods transferred from department I to department N included in the closing stock of department N. So this is 63,000, the value of closing stock. Multiply it with 70,200. So this is the value of goods transferred from department I to department N. And the total amount of expense incurred by department N is 54,000, 45,000 as manufacturing expense and 70,200. So in the denominator, I have to write 54,000 plus 45,000, that is the manufacturing expense, and 70,200. So you will get 63,000, multiply it with 70,200 and divide it with 1,69,200. So you will get 26,138. So the closing stock of department N, which was 63,000, it includes 26,138 is the value of closing stock that was transferred by department I to department N. Now we have to calculate what is the unrealized profit in the closing stock of department N and department K. So here I am writing unrealized profit of I in the stock of N. So 26,138, multiply it with 30 and divide it with 130. as because Department I transferred goods after adding a markup of 30% on the cost price. So I have to write here 30 by 130. This is the unrealized profit in the closing stock of Department N. So you will get 6032. Then the unrealized profit of N in stock of K. So you will find that 36,000 is the closing stock of Department K and there was no outside purchase. So the entire closing stock of Department K represents the goods transferred from Department N. But in this 36,000, there was also a transfer made by Department I to Department N. So we need to calculate the unrealized profit in the closing stock of Department K. So here, this is the unrealized profit of N in the stock of K. This is 36,000. This is the closing stock of Department K. And there was a markup of 25% on the cost. So divide it with 125 and you will get 7,200. Now unrealized profit of I in stock of K. Since there was a transfer made by Department I to Department N and from Department N to Department K, this means that the closing stock of Department K includes a quantity of goods transferred by Department I. So the unrealized profit of Department I in the stock of K will be calculated as 36,000, that is the closing stock of Department K, minus subtract 7,200. So this is the unrealized profit made by Department N in the stock of K. Then we have to multiply it with 70,200. So the working that I have shown you here, 70,200 divided with 1,69,200 and to multiply it with 30 divided by 130 and you will get 2757. So this is the most important part of your working, and the unrealized profit of Department I in the stock of Department K is equal to 36,000 minus 7,200. This is the unrealized profit made by Department N in the stock of Department K. Then we have multiplied 70,200. So this is the value of goods transferred by Department I to Department N, and 1,69,200 is the amount of expense made by Department N in purchase. So 54,000 is the amount of outside purchase. There was a value addition of manufacturing expense to a tune of 45,000, and 70,200 is the amount transferred by Department I. And there was a markup of 30% by Department I when the goods are transferred from Department I to Department N. So the total unrealized profit in the closing stock of the three departments is 15,989. So we can write here provision for unrealized profit on closing stock. So please have a look at the workings that I have done in working note number 3. This is a very important working for you. Hope you will understand the working that I have done here. In spite of that, if you find any difficulty, feel free to contact me through email and the contact number given in the description box. Now it's time to prepare the general profit and loss account. General profit So we need to prepare, right, only the two column, debit and the credit side. And here on the debit side, I have to write the net loss of the three department. So you will get 15,000. This is the sum total of 4,500 is the loss made by Department I. 8,625 is the loss made by Department N. and 1,875 is the loss of Department K. So there was an unrealized profit in the opening stock. So I am writing this as provision for unrealized profit in the opening stock, which is given 4,500 in Department N and 6,000 in Department K. So the unrealized profit in the opening stock is 10,500, and we have calculated the unrealized profit in the closing stock. So I am writing two provision for unrealized profit in closing stock. This is 15,989. So this is from working note number 3. So the general loss, or I am writing here as general loss, 20,489. Hope all the students have recorded the questions and the solution, and try to follow the process that I have adopted here to solve the question. Thank you. Thanks for watching the lecture.